I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market saw its widest swing since February as Monday's ebullience over a pause in escalations in the trade war between the U.S. and China turned into high anxiety when Huawei CFO was arrested in Canada and soon to be extradited over violations of Iran's sanctions. This is the daughter of the founder of Huawei, and this is a company that the U.S. has been suspicious of being involved in espionage with military connections, and this is a huge company. In fact, as far as their cell phone production goes, they are second in the world only to Samsung, so this is not a small company. The result was that there was a huge 1,740 point range in the Dow Jones Industrial Average, as two panics essentially hit the market on Thursday. The first one was when this news came out, and this was overnight, and the market sold down severely. In fact, in just a matter of moments, there was literally a flash crash as thousands of E-mini S&Ps were sold down some 50 points very quickly, and that was over this fear that the trade deal was in jeopardy now because of this issue of arresting this Huawei CFO. And then some news came out in the afternoon that the Fed was ready to pause, and that there had been buyers coming in, bargain hunters anyway, and the market essentially rallied, with the Dow Jones down 780 points to only down 80 points. That was a 700-point reversal in the afternoon on Thursday. And then on Friday, as far as all this trade war stuff goes, the president came out and said everything's okay, that all of this stuff about this arrest is not getting in the way of discussions that are ongoing between the U.S. And China. But that did not help the markets on Friday whatsoever. Other big issues in the market, of course, are oil prices and energy stocks, as oil prices have been under severe pressure, moving down below or the $50 number briefly. They were waiting for OPEC to come out with the news and about their reduction in production. That really was a struggle for them, as there were there's a story that Saudi was willing to do the cuts, but then Russia was holding out, and that Iran clearly wanted exemption to any cuts. And they were waiting for Russia to get on board, Iran, and there was really some nervousness there in the oil markets. Finally, the news came out that they came out with a $1.2 billion cut, 1.2 billion barrel per day cut in oil production, and that helped the oil market move up on Friday. But OPEC is clearly very weakened. Qatar leaving OPEC, and now these dissenters out there on these deals, and they need the money. All of them, Russia and Iran, and even Saudi Arabia, who spends a ton of money. And that's an issue going forward. OPEC clearly being in trouble. We think that there's a lot of trouble for oil prices going out into 2019. And when you get pretty much below 50, maybe towards $45 a barrel, which we think is going to happen, then the fracking really stops. I mean, they can't produce oil, the frackers, at a profit, and then the supply starts to come down. So that then puts a floor on the oil prices. But in the meantime, oil stocks are putting big pressure on the market this week, and they had been trying to rebound. We think that there is problems in oil land, but the traders know that there's a certain level here where the production will stop, and so right now for a while we think this area around $50 is a floor. We don't think it'll get much below that, at least for a while. If you filter out all the noise in trade and OPEC and geopolitics and the other little pieces of background in here, investors are clearly concerned about slowing economies. We have that in China, we have it in Europe, and that's being very reflected by what maybe made the investors the most nervous was the short end of the yield curve inverting this week. And that is, in the mind of investors, a problem. And the bond market reacted to that, on top of the market declining and a safety bid coming in, moving up pretty sharply. Now, the short end of the yield curve in the past has inverted, while it took a long time for other parts of the yield curve to invert, and that doesn't necessarily mean anything really that negative for the markets, for the stock market for sure, maybe for a while. We think there are other reasons, this economic slowing around the world that is going on, that is a big factor. When you look at our Fed, our central bank, and you look at the central bank in Europe, which really has not started yet to unwind their stimulus, and in Japan not at all, you've got extremely slow economies at times when these central banks have no bullets at all. Our central bank has been scrambling to get some bullets, but the problem is that when you have the Fed and the potential for the Eurozone central bank beginning to tighten at a time when there are no real inflationary prospects, you've got a situation where the short end goes up and the long end doesn't, or the long end starts to come down. And that is a real reflection of the fact that we have real deflation embedded in these economies. That was created by these central banks over the last 20 years. They are the culprits, and that really sets up the potential for economies turning down at much lower levels than they have before, or interest rates not being able to go up where they have in past cycles. And that is what the fundamentals are that investors are looking at. Our work shows that there are technical reasons for concern in the markets, and that is something that we are looking at very hard. While our patterns show that there is a lot of damage, and we're looking for the potential for an upside move in the markets that is somewhat minimal, just a rebound in the markets, and that is likely to be the just modest advance that we're looking for into early part of the year in January, maybe much more modest than what we originally had intended. So we see just limited upside in here now, and failed rally attempts in the stock market. A much slower stock market, much lower stock market in these advances than we had originally anticipated. So that is really our early comments, and we think that these markets do have significant issues moving forward. All of the markets in the world with not that much ability to get any real rallies going. Setting up my chart here for the S&P 500 for this week, as we look at our 60-minute chart, just putting this in place for you to see. As you can see that we have had a market that has moved sharply to the downside. This is the 60-minute chart. The gray area is the area of the overnight trading, and the white area is the trading during the day. We started out during the early part of the week, with this big jump as this 90-day truce was put in. E-minis moved up 48 points pretty quickly, the Dow 500. We had said fade that upside move, and that certainly was really an accurate thing to be saying. We thought if it moved sharply down, you should fade that also, but it was a big upside move, and in this case, we had this upside move that peaked here when China Xi came out and said, well, their comments were not meshing with Trump's. Later on, they got a little bit more on board with that, but that didn't matter. But the market gave a lot of that advance up here on Monday. On Tuesday, trade hopes faded, and France had their own difficulties with these yellow vest protests. Macron has suspended that diesel gas tax. And the short end of the yield curve inverted, and that really got people worried in here. The dollar, it was hit hard. On Tuesday during the trading session, Kudlow came out and said no deal yet with China on car tariffs. That really started to weigh on the market. As they could go up to 25% or higher if they didn't come up with a deal in these 90 days. Apple was downgraded on slowing iPhones, and President Trump came out and said, I'm a tariff man, and that tariffied the stock market, which more than reversed the big update on Monday. On Wednesday was the day of mourning for President George H.W. Bush, and you could see that the markets tried to rally a little bit on here as China came out with positive comments on trade. And here the Huawei CFO was arrested in Canada here on Thursday. This was that panic. Look at that selling that came in at that point, and on the news that she would be extradited, as that looked like a threat to the trade deal. China demanded the release and still does so. Here's where OPEC came out and they said they're likely to come out with a smaller cut in oil production. You had this big drop over here. Then over here, look at this reversal. The market was down 780 here. Here it's only down 80 points. Of course, that's the Dow. This is the E-mini S&P. And the report was that the Fed was ready to pause, and the market was ready to bounce. Payrolls came out on Friday, up 155,000, a slight miss, and that is actually read as some pretty good weakness showing in parts of the job market. OPEC agrees to that $1.2 billion barrel cut, and oil rallies 4%. And then Kudlow comes out and he says, after the December rate hike, the Fed is likely to pause for some period of time. And that actually was taken as an issue, a negative thing, because, well, the economies are so slow. Where are earnings going to come from? Of course, all of these earnings that we have had have come from economies that have been blown up, that have been inflated by these central banks, and created the earnings that we have seen and the financial engineering that we have seen that is only based on 0% interest rates. And if you lose that, well, essentially, between any central bank tightening and the fact that, well, at least they're not easing anymore in here, then there are these prices that we're looking at are really high. And, of course, the markets are getting very nervous about that. Stock market for the week down about 4%. The Russell, the second, third tier of the market, worse than that. The bond market up about 2.25 points on the 30-year. That was a very strong move as 10-year yields moved down 18 basis points. That's a very significant move. It wasn't long ago we were looking at about 3.25%, and now they moved down to 2.88 on the week. It was as low as 2.83 on the week, and we're likely to see those numbers get a little bit lower here. For the dollar, as interest rates go down, usually so does the dollar, and it was down about 0.3%, and we think there is risk. You'll see that in our short-term view coming up. Gold market significantly moving up as the dollar moves down, $24, and this is following the patterns that we were looking at. Silver actually gains about 25 cents, and we think there's more to come in the silver market also, and we're going to tell you about one of the silver stocks that we like moving into the best and worst stocks for the week. The oil market, that really chopped around as it looked like the market was at least groping for a bottom. It rallied, pulled back when it seemed like there was no deal out of OPEC, and then got a rally going here on Friday. So about a $3 gain for the week, pretty significant when you look at that. So that is our opening comments for the week. Basically, we think that the stock market has got a lot of trouble moving forward. Okay, so now we're going to get into our best and worst stocks for the week.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high these upside moves are selling opportunities.
We're about to show you our best and worst for the week and how our cycle analysis helps us analyze the markets and individual stocks, ETFs, and futures. Here's a little peek at our level 2, 3, and 4 member video dashboards. And you can see in here we've got 8 categories of videos. And what I really want to highlight for you here is our market week minutes right over here that you can see. And then we have future speak minutes. What these are is a way for you to go directly to our video analysis on any of these symbols that we show in these 2 most favorite videos. If I click on market week minutes right over here, I'm going to take you to the market week minutes page, and you can see that we have all of the market weeks that we have done in here, and you can refer back to all of our analysis that we've had. If I look at last week's market week minutes, it'll take you right to that page, and you can see in here that if you look at this point, you can see here's our week in review and everything that we say, and here's our best of the week and also our worst of the week below that. If I stop at best of the week, and let's say I talked about Abercrombie and Fitch, you could see that right over there. I click on that on the top, and it takes you right to that exact spot on the video where I did the analysis on Abercrombie and Fitch. It's just amazing. I can go right back over here, and let's say Salesforce.com. I'll click on that, and it takes you right to the spot where I did the analysis on Salesforce.com. It's just an incredible thing that you see here. We have that exact thing for market week, as you could see, and our future speak minutes. Let's just click on that for a second. We'll look at last week's future speak minutes right there, and here it shows you that we do analysis on the energy futures and on the currency futures right over there, and on the precious metals, and on the treasuries and the stock indexes. Let's say you wanted to refer back to what I showed in our deep analysis, weekly and daily, in the S&P 500. If I just click on that right there, it takes you right to the spot on the video, and you can watch our analysis on the S&P 500 right there. This is amazing. I mean, it's just fantastic work that our team is doing in showing you this market week and future speak minutes. You can have that, all that reference to all of this analysis for you to go back and review. We just keep it running week after week and learn a ton from everything that we show you. You can become a level 2, 3, or 4 member to have access to this, and I think it's just a great way to enhance your ability to learn our type of analysis and improve your trading. And we're even going to be adding more to this coming forward as far as being able to refer to our analytical work. Again, become a level 2, 3, or 4 member, and thank you very much for listening, and let's go look at our best and worst stocks for the week. All right, with the market down 4% for the week, there's not much to show you in the best stocks for the week. One of the stocks that had pretty good gains was Twitter. Twitter is a stock that we believe has been in a negative pattern. It got a pretty good rebound, and it's getting some pretty good press here from some of the analysts, but overall, we think not yet. We're a little bit doubtful about it being able to make a whole lot of upside progress right now. In this case, Guggenheimer has began coverage as a buy. It gains 9% on the week. And we're just going to say not so fast on this one. You can see that our analysis in here is saying that this is really be an area where it's got problems. Maybe it gets up here to 37.30 right over there at a best case, but we think it's already starting to show struggling here in this area under 35. And to us, that is not a time to be buying it. The time that we would consider buying it would be if it went through a corrective period in through this February low that's projected over here and did not break underneath this low under $26. So if it just kind of played around in here, you had a little bit of a correction, that would create a buying opportunity for us. But we think Guggenheimer is not timing this correctly if the stock is going to be good, and we would say at this point, just avoid it.
You have just watched the opening of the Market Week show. To watch the complete show, just go to the askSlim website and become a Level 1 member. It's no cost to you. It includes Slim's cycle analysis on the best and worst stocks for the week, plus his analysis on the short-term view for the coming week. There is always a lot to learn about markets, technical analysis, and potential trading and investment opportunities. You get the full Market Week, including the archives, special viewing of premium videos, sneak peeks to new product launches, and more specials along the way. Just become free an askSlim Level 1 member.
I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising